guys, let me just write this out. All right, guys, we're going to talk a little bit about risk reward and what I look for in risk reward. Now, this has been kind of a common question for a lot of you guys. For day trading, swing trading, different types of trading, different types of aspects in trading. So for me, what is my risk reward? Well, I'm going to use an example of what just happened on ZN. Okay, so ZN was a swing call. I called it yesterday. Here you see it right here. Called it yesterday. I bought right at the bell. Okay, here you can see it. Right at the bell yesterday, I added 2,500 shares, so it was a small amount of shares. I didn't go in big or anything like that, and that's not something I like to do with these swing plays. But what was I looking at? Well, I saw an oversold stock that had just been getting slaughtered, finding a bottom, starting to reverse, showing me a little bit of a convergence with a swing up. Okay, so what was my risk? Well, I entered in at 102. Okay, so I entered in down in this area right here. So my risk was the support level down here, the bottom side support, which is at 85 cents right here. So if you're looking at the daily chart, let's just pull up the daily chart. Pull up a horizontal raise so you guys can see this. You can see that was my risk. Okay, so my risk was 17 cents at 102. What was I looking for? Well, in retrospect, I was looking for this 20-day moving average, was sitting up here at 125 yesterday, 127, up to the 200, right? I mean, you could see when this stock gets killed, right, it bounces back to these moving averages. And look how far it is away from these moving averages. Well, those are your reward spots. So my risk is 17 cents to potentially make, what is that? 23 cents here or 98 cents here, all the way up to this range up here. Now, I'm not going to hold for there because I'm just not going to do it, and I don't have any interest in doing that right now. I mean, you could if you want to ease some shares and let it run up and do all that kind of stuff. That's fine. Everybody's, their own trader. For me, the risk reward was, 24 cents to risk 15. I will take that risk reward all the time, as long as it's like not 1-to-1. Okay, so when I'm in day trading, it's the same kind of concept. So this was a swing play. Okay, so let's talk a little bit. Let's just stay on the swing side real quick. Okay, so let's say something I'm watching next week is going to be Facebook. I'm going to be watching Facebook extremely hard next week because I most likely will swing it. Why? Because there's a trend. This red trend has been created since 2013. And that trend hasn't broke yet. It broke right here in 2015 for a second, but came right back up. So it broke above that trend, couldn't hold it. These ones don't really take an effect anymore. These ones are kind of foobar, right? So really, in retrospect, the technical analysis should look more like this. The screen share is in the Friday lessons room for anybody who wants to see it. And then you might have a small, you have a small one right here, right in that area. Okay. So what am I going to try to do? Well, I'm going to try to look for this red line to buy. Now, I had an opportunity at 158. I didn't seize the opportunity. The stock hit this top trend, may fall off here, so I want to watch it into next week. So what's my risk reward on this play? Well, what happens in this chart all the time? The stock comes above the moving averages, comes back to it. So what's going to be my price target? My price target will be this 200-day moving average. Look at it. Throughout the entire, even when it pulls away from it, it came back to it, right? It just always comes back. Had issues in it here. Couldn't break it here. Fell below it, all right? So if I can get an entry down here at like the 140, say 160, okay, with a price target of 180, so $20, and then my stop loss, if I'm in at 160, will be right on the support range. So we'll say 154. So my risk, if I get 160, is $6, and my reward is $20, right? So my risk is always less than my reward, always, right? And then everybody's like, oh, can you put it into a percentage basis? It's not really a percentage basis. I base it off of like where my risk is based on support range, right? So you can see right here is support, okay? You see how it acted as resistance right here. Once the stock breaks over that resistance, it becomes support. Now, it did break it pretty cleanly here, but came right back above it. This is support for me, right there, right in that range. So at 156 range right here. So for me, I want to get an entry as close as I can to that range for a potential run to the 200-day moving average. Now, something that I always pay attention to if I'm swinging into play is this death cross right here. This is the 50-day moving average is crossing below the 200-day moving average. This is what we refer to as the death cross, right? The 50 is a shorter moving average. When it drops on it, changes the sentiment of the stock, therefore creating an influx and possibly potentially dropping the stock off. You can see it happened here. Didn't really do much. Facebook has been one of those stocks that hasn't really done much to. But that's kind of an idea of what I look for when I'm swing trading, okay? Now, when I'm day trading, let's see, what was the stock that took off today? This SYN took off today, right? So SYN took off today, and I made a trade on it. I didn't get filled a couple of times, right? So I made this initial run, and you guys know me as a trader. I don't chase. I like pullbacks, things of that nature. So I try to buy right in this range when it was starting to show me this flag. I didn't get filled, and the stock ran up more. And then I bought this next run for a great gain. I think I made $1,400 on this trade. So what was my risk reward? Well, what do you see in the chart? So when I'm looking at the chart, I have to digest all of the information that I see. Well, I see this stock bouncing off the 20-day moving average over and over again, and it still hasn't broke it, so therefore it's still bullish until it breaks this 20-day moving average, which it's trying to do right now. When it can cleanly break it, it kind of broke it right here, came right back above it. VWAP is going to be another bullish indicator to tell you, where your risk is. So for me, when I bought this break here, what was I looking for? Well, the 20-day moving average was acting as support, and as it climbs, it just kept moving up. So for you guys that want to be less, more conservative in trading and stuff, I always set a trailing stop right under this 20-day moving average if you wanted to. Absolutely. You can see how the 9 EMA also acts as a nice support throughout the range. So when the stock gets these kind of moves, what happens? Well, usually it's holding this 9. You can see the 9, right? The 9 is right here. And the 20 is acting as great support. I see it happen over and over again. Let's check out, what's another stock that ran this week? JAGX. JAGX I made a ton of money on doing this exact same kind of concept. Okay, so you can see what happened. All right, so we had this beautiful run, broke below the 20, finally came back over it. When it broke, even this resistance right here, you can see, even this resistance right here, 166, any of these resistance would have been solid. But this one right here, a bottom feeding opportunity, there's a MACD bull cross right in here, right? You can see these different types of buy setups. And what happened? It held that 20-day moving average this entire time, okay? So for me, as the stock moves up, I ease my share. So I'm dropping my average price, which is also a part of my risk-reward ratios. But really, in retrospect, I'm watching if we get a big move to the upside, I'm watching that area. Now, for me, the risk is really using my rules, right? So if I'm down, I have a 3-tier loss system. Down $800, depends on the stock, right? $800 my first tier, $1,000 my second tier. My third tier is $1,200. Now I'm going in with larger shares. So like on a stock like JAGX, I was going in with 8,000 shares. So if I'm down 10 cents on the stock, I'm down $800, right? And that's the math. So when I'm looking at these kind of plays, I want to see the momentum carry it through, just like on SYN, just on these other stocks that we've been seeing, the momentum to carry it, right? And if it doesn't carry it, then maybe I just kind of sell. There's been a few times where I just didn't like the volume ratios or different types of things, and I just get out of the position, right? I'm done with it. I don't want to hold it anymore. My patience is run thin. But really, in retrospect, what I'm looking for as far as the risk-reward ratio is that I use my max loss system. So depending on how many shares I have, if I have 8,000 shares, and I lose 10 cents, I lose $800. So my first tier is hit. Likewise for the 1,000 to 12. So those are going to be my risk at all times, right? So I set myself my own floor for my own losses. I will set. And I don't rarely do I take any losses more than that. And if I do, that means I'm screwing up, or I'm not thinking straight, or I'm tired, or something's not right in my trading and I'm not being calibrated. When I'm making money and the stock moves to the upside, what am I doing? Well, I'm looking at different types of things. So as a stock, say this SYN, okay? We'll pull back to the SYN because that's fresh on everybody's mind today, which just broke out once again right off that 20-day moving average. If I bought here, my stop will be there, right? You can put it to a degree like that. You can do support ranges, right? So say, for example, I buy this resistance break at 30. It doesn't break out. Breaks below $4. I'll even make it $4 as my psychological resistance range. That's going to be my max loss, right? And this 20-day moving average breaking below it would be my max loss. Likewise with this one, right? So say if I bought this resistance break, my max loss is going to be in this range, right on this 20-day moving average, right? If it breaks below it cleanly, like this, you can see how it kind of broke below it, didn't really break below it. So say, for example, you can see this each consolidation station, right, is what I like to call it. These are all consolidation areas, right? So we'll change the color here. So this right here was resistance. Okay, we'll change the color. This area is support, right? So if I'm able to see the support, buy off this 20-day moving average, we break resistance, or I buy the resistance break. This is the range between the consolidation area. So each one is different, right? So this was the consolidation range, this was the consolidation range, and this was the consolidation range. I will make that red. Okay? Each one of these is consolidation areas. And when it broke, which it looks like it's having trouble with 750, which is now the new resistance level. Okay? So what am I looking for and how can I profit on this information? Well, if I buy an area, I know if the consolidation, at some point this will drop. The question is when. Excuse me, I'm about to go off here. The question is when. Well, let's take a look at the daily chart. It has potential to run up to probably this 200-day moving average, which is right around the $10 range. So when I'm looking at the chart, I know that information that it can run more, but I also see these consolidation areas. So when is it going to die out? When is it going to be done? As far as I'm concerned, it is still strong. It is still moving to the upside. It is not showing any weakness whatsoever. That's your trend right there. Just putting it right along that trend line and just keeps holding that trend and busting out over and over again. So for me trading this, I buy a resistance break at 750. I play it to $8. I can continue to scalp it over and over again with a stop loss underneath this 20-day moving average. There's your risk reward. I ease as the stock continues to climb. I drop my average price. The 20 is acting as my support range, so I'm going to try to get an entry as close to that, or buying on resistance breaks for the short squeeze, all along those lines. And that is what I look for when it comes to risk reward. So I like my risk reward to be at least, 1.5 to 1 has always been a kind of a ratio I like to use. So if my reward is 1.5 and my risk is 1, I like it to be a little more on the reward side all the time. So, any questions for me? Let me know in the Friday lessons room. I am not in the day trade room. This SYN is just going crazy, unbelievable. Look at that thing go. Looks like everybody sold too early. I sold too early too. But hey, made $1,400. I'm happy with it. So there is no such thing as selling too early. Get rid of all these. I don't really care about those. I want to see this trend though. All right, guys, I'm going to cancel this video lesson here, and then I'll put this in the video lessons room. You guys can review it. Hope this helps. Use risk reward in every single type of trade, and make some money using it.